Hi, I'm Michael Gable, Managing Director at Fairmont Equities. The financial year is nearly over and it has been a tough one for many investors. Gone are the days when it just seemed like everything was going up. The ASX 200 is on course for a flat year, but there are investors out there that are nursing serious losses, or they've seen some of their key blue chip holdings fall dramatically from their recent peaks. If you look under the surface, it's clearly a tale of two halves. There's winners and there are losers. But I'm going to show you where the opportunities are in a tough market. Here is a chart of the Australian market along with some of the major sectors. The black line in the middle shows the ASX 200, which has effectively gone nowhere all financial year. Sticking close to the financials index, that orange line is the financials, and it makes up a big part of the index. If you're invested in the index via an ETF, you've basically made no money, except for some dividends. But what is likely grabbing your attention are the two lines at the top, materials and energy. If you're invested in the materials sector, on average, your holdings are up about 50%. If you're invested in the energy sector, you're up about 20%. You would be making some very good money this financial year. Of course, look at the bottom and you see that the tech sector is down over 30% and healthcare is down nearly 50%. Your capital on average in healthcare has halved. That is, if you're invested heavily in these two sectors, then you are losing money. You're not even keeping up with the overall index. Now you might be thinking, what's the point of highlighting this now? We're just looking at the market with the benefit of hindsight. Well, for over a year now, in videos, webinars, and in my research, I've been talking up materials and energy and advising that investors increase their exposures to these areas. And for the past several months, in videos, webinars, and my research, I've talked about the need to rotate away from Australian tech stocks and into hard assets like materials and energy. This is exactly what I did for my clients last year, and you can go back and watch all my videos on this. The question is, will this trend continue? The answer is a resounding yes. There will be other people in my industry out there who have got it completely wrong, and they'll try to convince you that there'll be some sort of mean reversion, that our winning stocks will fall back down and that you should be buying their losing stocks in tech and healthcare. Don't believe them. I've spoken before at length that we're in the start of a commodities bull market. These always run for a number of years. It results in materials and energy stocks trading much higher than you think, and technology stocks possibly underperforming much more from here. I've spoken a number of times over the past several months of this rotation happening, and once again I'm telling you that this will continue to happen from here. Markets will remain tough and frustrating for those that don't catch the winning trend. But it's still early days, we're still in the early phase of the market. It's just very important to recognise where we are in the cycle, but not only that, to actually now act on it. If you're looking for more from us, go to the website fairmontequities.com and sign up to the free trial. You'll receive my trading guide on how to buy and sell shares, and you'll also get 8 weeks of my research delivered to your inbox. But if you qualify for our portfolio management service by having more than $500,000 to invest, then please give me a call to find out more.